If your spouse or partner passed away tomorrow, do you know whether you'd still receive their Social Security check next month? Most people assume the answer is yes. The actual answer is more complicated, and in some cases, the Social Security Administration will ask for money back. Today, we're clearing this up because it's one of those things nobody explains until a family member is already in the middle of it. I'm Anna Burr with Burr Law. We help families plan for the full picture, not just wills and trusts, but the financial realities that follow a loss. Social Security survivor benefits are part of that picture, and they're worth understanding long before you ever need them. Let's start with the one that surprises everyone. Social Security benefits stop the month someone passes. This is the question I get most often, and the answer is straightforward but catches families off guard. Social Security does not continue after death. The benefit stops the month the person passes away, whether that's the 2nd or the 28th. And here's the part that really surprises people. If a payment hits the bank account for a month the person did not live through, it has to be returned, even if the death happened on the last day. The Social Security Administration is clear about this. The payment is not yours to keep. If it's been spent, that creates a real problem. So if you're managing the finances for an aging parent or spouse, keep this in mind. In most cases, the funeral home handles actually reporting the death. When you provide the deceased's Social Security number, the funeral home typically notifies Social Security as part of the process. But if that doesn't happen for any reason, or the family or executor needs to call the Social Security Administration directly, don't assume it's been handled. Now for the more helpful part, survivor benefits. When the deceased's benefits stop, certain family members may qualify for ongoing monthly payments called survivor benefits. Here's who's typically eligible: a surviving spouse who is 60 or older. If the surviving spouse is disabled, the threshold drops to age 50. A spouse of any age who is caring for the deceased's child under age 16, unmarried children under age 18, and this extends to age 19 if the child is still in high school full-time. A disabled child if the disability began before age 22, and in some cases, dependent parents who are over age 62. The monthly amount varies based on the deceased's earnings record. A surviving spouse who has reached full retirement age may be eligible to receive 100% of what the deceased was receiving. That's meaningful income, and it's worth knowing how to claim it. There's also a one-time death benefit. Social Security pays a one-time lump sum of $255 to a qualifying surviving spouse or minor child. That amount hasn't changed since 1954, and it's not going to cover much of anything. But it does require an application, and many families miss it simply because they didn't know to ask. So how does any of this connect to your estate plan? Social Security benefits don't pass through your estate. They're not an asset you can will to someone, but they are a critical part of your family's financial picture, especially if a surviving spouse has been relying on 2 Social Security checks to cover monthly expenses. When we sit down with a client to build an estate plan, we look at the whole picture. What income streams exist? What happens to each one if one spouse passes first? If there's a gap that a trust, life insurance, or other asset needs to fill, we'll talk about it. Social Security survivor benefits are one piece of that conversation, and they often change the math. Here's one more thing. You have to remember the timing with survivor benefits. A surviving spouse can claim survivor benefits as early as age 60, but claiming early reduces the monthly amount permanently. In some cases, it makes sense to claim survivor benefits early and let your own Social Security record grow until age 70. In other cases, the opposite strategy works better. This is worth a conversation with a financial planner alongside your estate planning because the decision is irreversible. If you're not sure how Social Security fits into your family's financial plan, or if you don't have an estate plan yet, that's exactly what we're here for. We help families think through all of it, not just the documents. Use the link in the description to schedule a conversation with our team or call the office directly. We're here to help you find a clear path forward. Thank you so much for watching. Please subscribe so you don't miss what's next. We're covering estate planning for small business owners. If you own a business, your estate plan has to do more than protect your personal assets. It has to protect everything you've built. That's the next video. We'll see you there.